morning, everyone. The global market shifted violently overnight, leaving us with a very complex and a fragile setup this morning. The Wall Street faced a heavy turbulence, and today we are navigating the high pressure of monthly Nifty 50 expiry. When sudden global volatility meets the expiry session, the price action is usually unforgiving for the market participants. Right now, we are seeing a massive gap between the sharp declines in the US markets and our early morning domestic indicators. Whether you hold overnight position or plan to enter the opening bell, you need absolute clarity. So let's decode the numbers and build a defensive setup for today, February 24th, 2026. Good morning, everyone. My name is Ajay and welcome to Nifty 50 pre-open setup. Let's look at the data, define our levels, and set a disciplined plan for today. Global cues and US markets. Let's begin with the global handover. The US Supreme Court struck down President Trump's previous tariffs over the weekend. The White House immediately fired back with an emergency 15% global tariff. This sparked a massive trade uncertainty and caused Wall Street to plunge. The Dow Jones fell almost 650 points. The tech-heavy Nasdaq also faced heavy selling, dropping to 22,700 levels. Meanwhile, geopolitical tensions between the US and Iran are keeping the crude oil prices elevated. Nifty 50 summary and top movers. The Nifty 50 showed great resilience yesterday. Despite the global headwinds, the index gained over 140 points, closing confidently at 25,713. Looking at the top movers, Adani Ports led the charge, surging almost 3%. Kotak Mahindra Bank showed an immense strength, rallying over 2%. HDFC Life, Dr. Reddy and Ultratech Cement also posted solid gains to support the market. On the flip side, the IT and the metal sectors faced severe profit booking. Hindalco slipped over 2%, Wipro and Infosys dropped nearly 2%, burdened by the global tech weakness and AI fears. Tech Mahindra and Cipla also closed in red. Institutional activity. Now let's talk about the institutional activity. The data from yesterday is absolutely staggering. After a long period of selling, foreign institutional investors made a massive U-turn. They became net buyers in the cash market for nearly 3,500 crores. This is a huge bullish signal showing foreign money might see India as a safe haven right now. On the other hand, our domestic institutional investors used a surge to book profits and sold roughly 1,300 crores. Option chain and open interest. As we head into today's monthly expiry, understanding the option chain data is vital. The Nifty put-call ratio is sitting at around 0.87. This points to a cautious but slightly improving mood. The max pain for today's expiry is centered right in 25,500 to 25,600 zone. This means the option writers will try hard to pin the market in this area. On the call side, the highest resistance stands tall at 26,000 with aggressive new writing at 25,800. This builds a massive wall for the bulls to climb. On the put side, strong support has formed at 25,500 with the secondary defense at 25,400. The put writers feel confident that the 25,400 floor will hold today. The setup, bullish versus bearish scenarios. So what is the exact setup for today? Let's look at the bullish and the bearish scenario. The bullish scenario. For the bulls to stay in control, Nifty must hold an intraday pivot near 25,540. If the index opens flat, absorbs the global weakness and stays above 25,600 for the first 30 minutes, we could see a sharp short covering rally. In this case, look for the Nifty to target the immediate resistance at 25,700. If the momentum continues, it could push towards 25,800. Keep an eye on the PSU Banks and the financials that lead this move. The bearish scenario. So you must respect the volatility today. The India VIX is elevated above 14, which means sharp swings are highly likely. If the market gives in to the negative global cues, breaks below the 25,450 support, the structure will weaken. A 15-minute close below 25,450 will trigger a panic selling for the put writers. This opens the door for a quick drop to 25,300 and possibly 25,250. If the IT and the metal stocks keep sliding, this bearish move will happen much faster. So as we wrap up today's pre-open analysis, I want you to leave with a strong warning. Monthly expiry days are known for wild and erratic swings. And today, we have added the pressure of global tariff confusion as well. False breakouts and the breakdowns are very likely, so please keep your position sizes strictly under control. Do not chase the OTMs and never enter without a hard stop loss. And protect your capital over everything else. This is Ajay Eka and I will see you tomorrow. Bye-bye and take care.